Mohamed El-Erian of Pimco, writing here, writing there. Welcome back to the program, sir.
Thank you, Tom.
Europe's central bank at sea. How far out to sea is Frankfurt right now? How adrift is President Trichet?
He's out there with lots of people on his boat because he's rescued so many people. He was hoping that the big German ship would come and help him, but it looks like the big German ship isn't coming. So he's out there, Tom.
I met with a high-frequency trader last night at dinner. Came up to me and said he likes everybody on the program except Mohamed El-Erian. Get rid of that guy. I'm kidding. But he said to me the first thing he saw was the financial transaction tax within the headlines of Merkel-Sarkozy. How can they put a financial transaction tax in if all the business moves to Zurich and London?
Big question, and clearly they have to implement it in a globally coordinated fashion. And already we've had a couple of Eurozone members come out and saying we're not in favor of that. But, Tom, I would view this in the context of a negotiation between France and Germany. France has loved the idea of such a tax. Germany got a lot out of their summit with France, and I would see this just as part of the compromises that are made at a summit. It's not clear that it will be implemented, though. Here's
the key sentence of this op-ed, folks. I wrote this up on EconoChat out at Bloomberg Business Week. Look for EconoChat at Bloomberg Business Week on a lesser Europe. After some considerable volatility, a smaller and more robust currency union will emerge. And importantly, Europe will avoid the Euro's demise and a total breakdown of the Eurozone. Dr. El-Erian, are you suggesting that peripheral Europe will peel away from core Europe?
I think there's a high chance of that. I wrote that at Dallas Airport, changing planes on Sunday, so I didn't know what was going to come out of the summit. But you look at the three possibilities, Tom, for where this can go. A complete breakdown. That's in nobody's interest. Second, a complete fiscal union. That means that Germany has to be writing checks for a very long time. Unlikely. Third, a smaller, much better integrated, fiscally stronger Eurozone with the possibility that 1, 2, or 3 countries may have to take a sabbatical. And I think that's where we're going, Tom.
And this is the debate of Martin Feldstein. And, folks, I'd also suggest Joachim Fels of Morgan Stanley, way out in front on this. If we do that, Dr. El-Erian, don't we by definition get a rush, almost a physics vacuum of money into that core Europe, diminishing exports of Germany, of France, and let's say the Netherlands as well?
Well, you saw yesterday how the euro responded when it realized that Germany was now targeting a stronger core. Germany is basically saying, I'm going to strengthen the core, and I want all these other countries to abide by our rules, and we're going forward on that. So the euro's reaction was, hey, maybe Europe is not as weak as it looks. More importantly, Europe is not in the world of first best. They're going to have to make compromises, and right now, the most important compromise is to stabilize the core. Last week, France got a real scare, Tom, real scare when it saw its CDS go up to 180, when it saw one of its banks under pressure. So that's why France is now signed up for stabilizing the core.
Yeah, let's go to this chart here, folks. It's an elegant chart, German and Greece GDP, and you can see normalized to 2008, just a drastic drag and contraction, as Rogoff would call it, of Greece, the yellow or orange line, and you can see Germany really coming back nicely to 2008 levels. Convergence really hasn't happened, has it, Dr. El-Erian?
It hasn't. It happened in the financial markets, in interest rates, and that turned out to be an illusion because you cannot converge financial variables without converging economic variables, and I think that's what Europe realizes today.
I have to take the time to talk to you about the miracle that is the Swiss peg. I didn't read that in any of my textbooks, Mohamed. How does Switzerland get out of, to remove itself from this Swiss franc strength?
Very tough. And it's not just Switzerland. All the economies that have carried the burden of appreciation, Brazil, Switzerland, are all saying, enough, guys, we don't want any more of your capital, but they just don't know how to slow it. It's very tough, and that speaks to these imbalances, Tom, and how difficult it is to adjust a global economy when only one side is adjusting.
Mm-hmm. Let me talk to you about investment. It's something we spend more time with Mr. Gross on, but let's touch upon your expertise in emerging markets. They've been on sabbatical. Do you still suggest that emerging markets will come back into 2012? Do we need to go long Brazil right now?
Yeah, remember, when you invest in emerging markets, you underwrite the bad technicals. And the bad technicals are very simple. The markets are small relative to the capital that comes in and the capital that goes out. So these markets will inevitably overshoot on the way up, and they'll overshoot on the way down. And we are in an overshooting process on the way down right now. Why? First, we think that most systemically important emerging economies can manage their success. They have the balance sheet. They have the internal growth dynamics. Second, we hope, rather than expect, we hope that the world can accommodate their success. So you want to look right now at selective opportunities. It's not yet the time to buy an emerging market index. The time will come, but it's not yet now. But it is the time to pick up selective opportunities and then wait and see as the global adjustment proceeds. In the final minute we've got with you, Mohamed, I want to go back to your Project Syndicate op-ed and this very important sentence of peripherals having the option to spin away. Which institution should we look for to affect that transaction, or will it be nation to nation? Will it be Germany and Greece that negotiate that parting? I suspect it will be bilateral. We don't have a process for it, so no one knows. In fact, some people will say it will never happen because we don't have a process. I think it's the other way around. We will have an ad hoc way to do it because that's going to be what's in the interest not only of the Eurozone, but ultimately also in the interest of a country like Greece. Remember, you put up the chart. Greece has two distinct issues. It has too much debt, and it's not competitive enough. And it's very difficult to see Greece overcome these issues within the Eurozone.
Very good. Let's leave it there. Mohamed El-Erian of Pimco, Pacific Investment